The COVID lending era for businesses is over. No documentation, fast approvals, high limit approvals, no banking relationship or minimal banking relationship, just a decent credit profile, decent credit score, and a couple metrics in place on the business structural side. And you were getting 20, 25,000, 35, 40,000, 50 plus in approvals like water between roughly 2020 and about 2024. Now in the middle of 2026, those of you who have been in the landscape for a while can attest that era is dead and gone. Business lending is tight as it's been in probably a decade plus. And I want to go over the dynamics of the changes from the 2020 to about 2024 era, where approvals were easy, they were fast, and they were high limit, to where we are today. So you can be in the best condition possible to still maximize approvals, even though the landscape, the economics, and the lending space has changed so much for small businesses. Now, many of you, again, if you've been around since the 2020s, early 2020s to the current era, you may have either participated in that era and seen the benefits of what was a totally different business lending environment, or you may have sat on the sidelines and heard about and seen people getting crazy approvals and just weren't sure what was going on. I'm going to demystify a lot of that in this relatively short but value-packed video. For those of you who are new, I'm JP. Welcome to the invitation. I'm going to be your business banker and your capital strategist going forward. So the reason this video is important is because the dynamics in the lending space and the economic system shift relatively frequently. Many of us as business owners, we have very little to no real background in the financial sector of things, the business or the business lending side of things. So we are thinking credit profile, maybe some revenue, a little age in business, and I should be good to go to get funding. There's a myriad of other factors that influence whether or not you get approved, some of which are well outside of the realm of your own personal and business financials. I recently covered a video talking about the Federal Reserve and monetary policy in relation to small business lending. And it couldn't be more relevant now to have this nearly as a follow-up video to talk about how if you were in the COVID era of business lending, then you were probably spoiled. And in today's world in 2026, the back half of 2026, you're probably experiencing, if you're still out there applying for funding, where it is a lot stricter, a lot tougher. If you're getting approvals, they're not as fast. If you're getting approvals, the limits aren't as high. There's a reason for that. Those shifts are largely due to the economic circumstances that changed from the 2020 to 2024 to now. And I'm not going to nerd out on you about monetary policy in the Federal Reserve. I kind of covered that in a little bit more depth in a previous video just a couple of days ago, so go check that out. What I want to talk about in this video is, what do you need now that you didn't have then, that you may have gotten success back then, in order to get the same or better levels of success you need to have now as a business owner? So again, rewind the clock. You probably needed little to no documentation to not only get high limit business credit cards, but probably even some introductory lines of credit with some institutions. That has changed now. Even for business credit cards, you may not need much in documentation, but you can be thoroughly sure that they're doing deeper dives and investigations on your business when approving you for even business credit cards at reasonable limits. You may have gotten away with that instant approval anywhere, again, between 2020 and 2024. Now they're holding the application and pending it for days. They're asking you to verify your Secretary of State. They're asking you to verify your business address. They're scrutinizing your business address. They're digging much deeper into the basic demographic data of your business that they weren't before. They may be digging into your personal credit profile as well, much harder than they were or much deeper than they were before. Another factor that you want to consider, you didn't need as much of a relationship. You could go in either cold turkey or just be in for a month or two and get approvals like it was water. And this is, again, talking about some of the biggest financial institutions in the country. Some of the top 20 lenders in the small business space were handing out, high limit approvals, and business lending requests were getting approved like water. It was easy. That's changed. And another dynamic is the relationship side. Because we're now in what's considered a tightening cycle of monetary policy, well, ultimately, the powers that be, like the Federal Reserve, are looking to restrict how much money is flowing into the system, restrict how much capital is being pushed out into the market to be borrowed, because they want to manage the price of goods and services. So when we were in the COVID era, at that time, there was a lack of economic activity. So the motto of the day at the time was put as much money in the system, make money as accessible, cheap, and easy to access as we possibly can. So more people can get their hands on capital, businesses can continue to grow and function, consumers continue to spend, workers continue to get paid. We need as much money in the system as we can. That, as a byproduct, led to where approvals were way easier. Banks had a lot of money to throw out. Banks had scale and scope of applications that they were taking in. They had the capital to match. So they were going to lower the barrier to entry of fine-tooth combing through every application. People were slipping through the cracks with crazy approvals with little to no skin in the game when it came to relationships. That era is gone. Banks are tighter now. Lending is tighter. A lot of defaults have happened. Financial pictures have changed on the national landscape. Debt as high as it's ever been. Savings rates are down. All of the different larger metrics that banks are looking at and lenders are looking at to determine their comfortability in lending has changed. So what that basically means is, along with, denser credit profiles, along with being ready for applications to take longer to get reviewed and approved, being asked for more documentation or to verify more stuff, you're likely going to need to be, if it's a full-scale banking relationship we're talking about, think of a Chase Bank, Bank of America, et cetera, you're likely going to need to be within these ecosystems for months before you get a healthy shot in the application. It could be a year plus, depending on what you're applying for. Very important to understand this and hopefully know it before you go in. Comment some of the institutions that you might be interested in or plan on applying for in the near future, and maybe we can talk about that further. But it's very important to understand the dynamics have shifted. The economic system is looking to balance how much money gets put in the system, mitigating losses and risks to the banking system, where banks are putting out too much funding that's not getting paid back and creating a systemic risk to the entire financial system. It's much bigger than your basic approvals when this kind of thing is going on. And the more you know and understand of it, the more of a competitive edge you'll have as a business owner. Hopefully it means you're making great relationships with great bankers, capital strategists, and financial institutions, and getting an understanding of where they are at the time with underwriting and business lending. Their appetite can change. So you want to make sure, again, you have documentation in order. Don't try to wing it. Make sure that everything that you're putting down on your application, you can back up and verify. Don't try to go with the authorized user thin credit profile scenarios. It's not going to serve you in today's climate. Make sure that you establish banking relationships, ideally somewhere in the neighborhood of 6 months up to a year before you really start to reach for capital. Because business credit cards, yes, you can still get approvals in the same day or, relatively early into that relationship, but you can be certain that you're likely not getting the level of approval you would get if you waited 3 to 6 months. It's not just about, polished, pretty application metrics and data points anymore. And the bank is just like, okay, this looks reasonably good. Give them a bang, give them a bag. Like, that era is gone. So what you want to do is make sure, I guess I always say on this channel, I's dotted, T's crossed. Make sure the things that you're putting down, you can verify or validate. Make sure that you're prepared to get ahead of your lending requests. Give yourself 3 to 6 months before you need access to that capital to get situated. And do your best to build a relationship with an actual banker there, a quality one ideally, that can guide you to the insight necessary to increase your approval odds. You may find institutions that, have a different lending appetite and may be a bit more flexible or faster moving or need less documentation. They still exist, but you have to do your due diligence in advance. You used to be able to throw anything against the wall and most of it would stick for about 3 to 4 years. Now that the low interest rate, money pumped into the system environment has faded away, things have changed almost drastically in a matter of a couple of years, and you can't pay an institution to approve your request in some cases. So make sure you get ahead of your lending requests. Make sure whatever you're putting down in your application is verifiable and you can back it up. And also make sure you're establishing healthy relationships. Last key note I'll leave you with before we wrap this short video up is a lot of the larger banks were most exposed to these high lending velocities and were also most exposed to the losses that came with them. A lot of you are sleeping on local financial institutions, small financial institutions, and what I also talk about a lot on this channel, CDFIs, community development financial institutions. There's a lot of other resources and financial institutions that aren't on your radar, who you're sleeping on or you're passing up on a daily basis, that may be much better equipped and situated to handle your lender requests, especially if you're a newer business, a low revenue business, credit isn't perfect, not a lot of collateral, you need to be exploring alternative options, not going to your mainstream brick and mortars or even your American Express mainstream online lenders and providing them with some polished data points and thinking you're going to get approval. Might not go the way you are hoping for it to go. So comment down below. Let me know how your experience has been in recent times with business lending requests. Let me know as well if you were exposed to the lending era of about 2020 to 2024 and what kind of success and experience you had that can be a testament to this video. Did you have a great experience? Were you getting approvals left and right? Did you have a hard time then? Are you having a hard time now? Are things flowing like water now? What is your experience right now with business lending as an entrepreneur or business owner? Comment down below, and also comment again, any institutions you plan to apply for. Other than that, like, comment, share, subscribe, support the video, support the channel so the channel can continue to support you. Get in the description section and the about section if you want to learn more about myself as a professional and who you're getting this content from. I have a relatively extensive background in banking and finances, and I'm currently a small business banker and relationship manager in development. Also, the channel is actually born out of my first self-published book, which is in the description section down below. This book is the invitation after the channel, of course, or the channel is after the book, but it is Bridging Banking, Credit, and Capital. It is designed to create the financial fluency that will close the wealth gap. Not only getting you the information and the data points, but to help you navigate the relationships that you need to establish, to have real success, not only in accessing capital, but deploying that capital sensibly to actually have success with your business once you get the capital. So make sure you tap in with my book. It's a great read, and there's a lot of valuable information in it that help change your mind and your viewpoint on how you view banking, how you view relationships with financial professionals, and also financial literacy and education. So you can have, again, the competitive advantage over business owners who are not taking the time out to watch these kind of videos and read the kind of books that I made. So take that time out to invest in yourself. Other than that, I want each and every one of you to stay focused, stay in motion, and I'll see you all soon.